Hey, good morning, everybody. Bob Trade Genius, 29th of March. So I'm going to show you I think, a distinct possibility for the markets. This was the initial move down. One can argue maybe it was up here, but I'm talking about the big move down here. And you have this corrective action, and then this has been the dead cat bounce. Now, I'm just making an assumption that Thursday caught the high. And if we just do kind of an ABC pattern here, we're looking at, and this is not time frame because obviously I'm just trying to show you levels here, but it takes you down to, this is the level I think we're going to get to. The ABC pattern says we get in somewhere in between there. And, um, and then worst case scenario, we're down to basically 159 on the SPY. It was ironic for ever since the uh, the Trump election is that I always thought that we would revisit the 1800 area and on SPX, and we just never did. We just kept grinding. So some of this is just getting back to normal, and then we need to push down to cover this significant recession we're going to have. So now, the good news in a sense is that they're basically throwing a lot of money at this problem, and people who are worried about hyperinflation, just take a deep breath, because there's a lot of debt out there that's going to get liquidated, and we're the reserve currency in the United States, so dollar denominated debt. We don't have our debt denominated in anybody else's currency. Okay, so you could just set hyperinflation out of the way. You could set the Weimar Republic out of the way. The Germans were they tried to they tried to inflate their currency away to pay off the reparations. The French caught them. Okay, and they did not want Germany to use marks, so Germany got screwed. So you just have to set that whole thing aside. And what a lot of people don't understand about money, especially now that we're at the zero bound, that means you could double, triple, quadruple the debt. Your carrying cost does not change at all. You just have a lot more debt out there. And a lot of it's going to go to replace other debt. So when you hear about the $6 trillion stimulus package, it's not $6 trillion stimulus package. It's $2 trillion stimulus package. It's $4 trillion of replacing other debt at a higher carrying cost. And the U.S. government's going to replace higher carrying cost debt with new debt at the zero bound. So there's a lot of things we have to work through before you worry about that. What we really have to work for is the total destruction of civilization, about making people move because they can't pay their bills, and move to where? If they have no credit, then nobody's going to accept them. So they just got to unseize the pipes. And that's what's going to happen first. And then we can worry about inflation 2, 3, 4 years down the line. But I don't think they're going to worry about that too much. I think the Federal Reserve is going to take on as many things on the balance sheet as absolutely possible, and they're going to work themselves through till the baby boomers start to roll off the social cost index. It's the average age that people start passing away. Men and women. Let's call it 77, right? We have boomers now rolling into that zone. And then in 10 years from now we're going to be at the middle of that bulge, and then you're going to see that fall off, and then we have a baby bust after that, meaning very few people, relatively speaking, are going on Social Security or Medicare. So they're just going to absorb it. They'll put 30-year bonds out there. The Fed will buy 100-year bonds, whatever they think they need to do to keep this thing moving along. And let's say inflation comes, well, everything's indexed to inflation for tax, for this progressive, and they're going to take in more tax dollars. So we have a lot to worry about before we worry about inflation. So don't let people scare you. Okay? Now, if you're outside the United States, be very afraid. Sorry. You're going to need to protect yourself. The European Union is gone. Okay? It's a construct waiting to shatter. And Japan and China and South Korea and Germany all rely on strong export markets. That's collapsing. The biggest beneficiary of that, United States. We're going to bring manufacturing home. We have to balance between this hyper service economy we have, and we're going to have to bring more manufacturing into the equation. That's going to happen. It's natural. People are going to demand it. I'm going to demand it. And things cost a little bit more because of that. So be it. If profit margins are squeezed because of it, so be it. I think people are beyond it now. They can see the value of a close-in supply chain. The second thing is food. So, once again, United States extremely well positioned. And Brazil, Argentina, Australia, great shape. We're the big grain belts. Okay, Russia, you can say what you want to say about Russia, but those people think ahead because they have to. They just cut off their export markets for grain. The southern part of Russia and Ukraine, that was the overflow belt. That was the marginal producer of grains. And, it doesn't take a genius to see that grain starts to slip. Russia's going to put themselves in a great position to demand higher prices, especially since I fear Canada will go offline in global cooling. It's going to be a problem. And United States, once again, we don't have to import food. Anything that we import is out of convenience, not out of necessity. We can live quite well without importing a single ounce of food. And I guarantee you that we will cut exports off in a New York minute. If people think they're going to starve, politicians will not have a choice. Who's going to be the biggest loser in that? China, Japan, South Korea. Europe is relatively okay with food production. They have their issues, but they protected their farmers and their farm production pretty well. So that's the other thing you got to worry about. So, and then, we're going to have to wait and see what happens. This pandemic will pass. We've already seen we have protocols for it already. There'll be a vaccine in a year. And the antiviral protocols that are putting in place seem to be working. Spring is coming. They'll knock it down. We'll get us positioned for the fall. So when you get the reverb on this coronavirus, and then it'll be gone. Then we got to pick up the pieces. So that's kind of where we stand. But, things aren't going to be the same as they were before. But in America, we're going to get through this, and they're going to just shove money into the system until they create the velocity they need. And they're going to try to avoid just catastrophic civil unrest. We just have to keep the better angels, if you will, monitoring the situation. We can't let the far right or the far left go absolutely crazy here. We need to just work our way through it. You guys have a great weekend. Short-term pain, I think long-term gain is the mantra for me. See you later. Bye-bye.